This webinar marks the first in a series. Second session is already planned for April, where we will build on today's discussion and try to go more in depth and be more pragmatic after this global framework. This session is co-organized by FAST Partnership and FAO, and I will give the floor to Julia. The Agri-PDB platform is partner of the FAST initiative. And yeah, Julia, please.
Thank you very much, Thierry, and it's great to see so many people connected. The item carbon markets is really a very important subject that holds also a lot of importance in the work plan of the FAST partnership for this year. So we're really happy to be able to collaborate with the Agri-PDB platform, and we're really happy to see also some of the institutions with which we have also collaborated in the past. I just wanted to introduce quickly the FAST partnership, which is born as a COP27 initiative, and it's now a COP-to-COP mechanism to support countries in improving the quantity and the quality of climate finance going to agri-food systems. The FAST partnership operates around 3 pillars, and we're really happy to be able to collaborate with so many technical partners as the Agri-PDB. Thank you very much, and I will leave the floor to you to start the webinar. Thank you.
Yue, please. Can you hear us?
Ok. Et juste avant de commencer, on souhaiterait juste vous rappeler que des sous-titres sont disponibles et vous pouvez trouver le bouton afficher les sous-titres qui est juste dans la barre d'outils en bas de votre écran. Et s'il n'est pas visible, vous avez juste à cliquer sur le plus, puis sélectionner sous-titres ou afficher les sous-titres. Et vous allez pouvoir avoir accès aux sous-titres. Merci. Over to you, Ale.
Then in English, maybe? And what about the chat? Do we have a chat and Q&A? How does it work? Yue.
Yes, everyone, hello. Welcome, and please feel free to post any questions in the Q&A session or just basically in the chat. We will get back to you. We will have a 20-minute Q&A session at the end. So feel free to raise your hand or request to unmute in the Q&A session. And before we begin, we would like to remind you that captions are available. Please look for the Show Caption button in the toolbar at the bottom of your screen. If it's not visible, click More and select Captions or Show Captions. Okay, now I pass the floor to our panelist.
Or is Alejandro available to have a word in Spanish?
Yes. Sí, solo para recordar que los subtítulos están disponibles. Si quieren acceder a los subtítulos, por favor, den clic en mostrar subtítulos. Si no les aparece en la barra de abajo, pueden dar clic en más y dar clic en subtítulos o mostrar subtítulos. Y recuerden que vamos a tener una sesión de preguntas y respuestas al final. Así que los invitamos a dejar sus preguntas en el módulo de preguntas y respuestas. Gracias. Over to you.
So muchas gracias. And we have now more than 50 attendees, 77 in the session. Ivano, the floor is yours. Please start.
Thank you very much. Thank you, Thierry. Thank you, IFAD, for this opportunity to talk about carbon markets, this very important topic, and also for the opportunity to address to this very important stakeholder. And we will see in a few seconds how PDBs can be a crucial player in carbon markets. First, let's start to introduce ourselves. So my name is Ivano Senza, carbon market specialist at FAO in the Office of Climate Change, Biodiversity and Environment. And here I have the pleasure to be with my colleague, Elena.
Good morning, everyone. I'm Elena. I'm a carbon market specialist from the Office of Climate Change and Biodiversity and Environment from FAO.
Thank you, Elena. Just before we start, we would like to set the scene on carbon markets and what we will be talking about very quickly. So, as we all know, the world is not on a pathway to deliver the goals of the Paris Agreement. Climate finance must increase at least fivefold from current levels to $7.5 trillion per year from now till 2030, and then to at least $8.8 trillion a year to avoid the most severe effects of climate change. Obviously, achieving this will require urgent, coordinated action across all sectors, especially from financial institutions, companies, governments that have the power to direct capital flows and scale solutions. Within this webinar series, what we would like to address is how carbon markets can be contextualized, but starting from the basics, pillars, foundation of those mechanisms, knowing that there is a lot of there are a lot of gaps on knowledge around carbon markets and also some misconceptions. What we would like to do today is to start explaining, starting from the basic definitions, showing you what are the different types of mechanisms. And as Thierry said at the beginning, showing you what are some trends when it comes to carbon markets in agri-food systems. And obviously how we take the lens of Agri-PDBs within this entire carbon market ecosystem. And we'll be having the pleasure also opening this dialogue at the end of the session to have any questions from you being answered live. So just before we start with some definitions and before I pass over to Elena, when we wanted to address carbon markets for financial institutions, we wanted to make sure that this is as relevant as possible for PDBs, and obviously within the umbrella of financial institutions. This instrument, and we will see also what types of mechanisms there are within it, it can be of great potential for the financial sector. And we will see what are some of the opportunities, some examples that we can explore together. And then explaining how, from a project development point of view, the financial instruments can play a big role when it comes to developing projects, financing projects in the different stages of the project development cycle. And we will have a demand and supply point of view so that you understand the entire dynamics from, let's say, a 360 degrees perspective. Obviously, financial institutions play a role today and will play a huge role in the future, especially when we talk about finance emissions within the global net zero economy. And that is where loans, investments, insurance obviously play a role. And in accelerating the transition to a low carbon economy within a context, and here we would like to set real expectations to address also risks on the uncertainty that is coming both from the demand side, so from private sector, but also from a governmental point of view, and also on the supply side. And that is where the elements of quality and integrity have to be addressed. And you will see this narrative on integrity being a keyword throughout the entire webinar. I'll thank you. I'll pass over to Elena before handing back over to me. And thank you. Oh, sorry. Before we start, just to keep you engaged and attentive to this webinar, we would like to ask you, and we'll see now a live poll being shown to you. This question: how do you feel about your level of knowledge regarding Article 6 and carbon markets? You will see it in a few seconds. You should be able to see the question with the answers. I'll give you a few seconds to respond. And again, this is also helping us to understand level of maturity, level of understanding and knowledge on carbon market mechanisms, so that we can address both today throughout the presentation and also for future webinars. Thank you. So I will end the poll. and the poll and share results. And what we can see is that we have an average of between most people have the most where we got most responses on free. So we have like an intermediate level of familiarity around the topic. But we don't see a clear message on saying we have a very strong audience on high level carbon market knowledge. So there are gaps that we are aware we need to address, and this is why and that's also the aim of this presentation. So thank you. Now, yes, I will hand over to Elena. Thank you.
Okay, so we will start with a very basic question. That is, why climate finance for agri-food systems matter? So agri-food systems generate 1/3 of global emissions, yet the current levels of climate finance are not sufficient to meet the mitigation and adaptation needs in the agri-food system, with a gap per year of more than $1 trillion. Even though agriculture holds a huge sectoral mitigation potential, it remains underfinanced. As a matter of fact, agri-food carbon credits issued between 2003 and 2023 correspond to only 1% of all the voluntary carbon credits issued. Okay, so what are carbon markets? Carbon markets are systems where carbon credits are traded, and these carbon credits, they correspond to greenhouse gases emissions that are removed or reduced from the atmosphere. They can be bought by governments or companies to offset their emissions, and PDBs can play a key role by helping the carbon markets development and the carbon credits transaction. Okay, so here you can see that there are two types of carbon markets, the voluntary and the compliant. In the voluntary carbon markets, the carbon credits that are traded, they are generated by these projects that reduce or remove emissions. So in this case, an emitting company can buy the carbon credits from offsetting projects. In this case, participation is voluntary and all sectors are covered. While in the compliance carbon markets, there is an entity that sets a limit on CO2 emissions and issues tradable credits that are also known as permits or advances. In this case, the companies can trade between each other the carbon credits. So, for instance, as you can see in the graph, there is a company that didn't reach the threshold of its CO2 emissions, and therefore it can sell the remaining carbon credits to another company that instead needs to offset its excess emission. In this case, participation is mandatory and only high emitting sectors are covered. So for the compliance carbon markets, agriculture is covered only if the compliance carbon markets, also known as cap and trade and emission trading system, include also crediting options. Next slide, please. Okay, so what are carbon credits? Carbon credits correspond to 1 ton of CO2 that is removed or avoided from the atmosphere. These carbon credits are generated by projects that reduce or remove emissions. So an example can be reforestation or afforestation. Only once they have been verified by third independent international parties, these credits can be traded. You can better see it in the graph. So you can see that there is an activity like afforestation that generates carbon credits that then are bought by emitting companies whose money then go back to fund climate-friendly projects. So carbon credits are a financial tool to fund, to incentivize projects that contribute to climate change mitigation. Okay, so carbon markets are strictly connected to the Paris Agreement. I guess most of you know what the Paris Agreement is. So the Paris Agreement is a legally international binding treaty within which countries have to submit their nationally determined contributions. Article 6 of the Paris Agreement provides different mechanisms for countries to cooperate with each other to reach their NDC target. And one of these cooperative approaches is carbon trading. More specifically, as you can see on the right, Article 6.2, it allows countries to trade voluntarily between each other mitigation outcomes, while Article 6.4 facilitates carbon credit trading through a UN centralized supervised mechanism called the Paris Agreement Crediting Mechanism that replaces the old Clean Development Mechanism. At the end, Article 6.8 addresses cooperative approaches that are market-based. Now I will leave the floor back to Ivano. Thank you.
Thank you, Elena. Let me continue. So on Article 6, why is Article 6 an opportunity for finance, for agri-food systems finance? So as Elena briefly explained, the different types of mechanisms, and now those can be used as instruments for governments or for private sector to exchange, buy and sell either mitigation units through Article 6 or whether it's carbon credits specific for the voluntary carbon market. What we want to address, and it is important for you to understand and to really grasp, is that as this opportunity are being unfolded for governments, and also the institutional frameworks, policies, mechanisms. So even MRV systems. So the MRVs are technologies, protocols to measure, verify, and report on data. And now this relates, of course, to national NDCs. They become an opportunity because to enable those opportunities to become real, concrete, and of high integrity and quality, financial institutions can provide from one side the safeguards and the risk management tools to assist, but also to act as an advocate for high integrity methodologies and due diligence protocols. We are not going to deep dive, deeply on Article 6 mechanisms today, as we aim to do project level and compliance level and jurisdiction on another series, webinar series. But what we want you to understand today is how Article 6 is an opportunity for governments, and hence they will need support for providing both financial instruments to institutional and private sector to act as an enabler for project development. And so this is where the relevancy of Article 6 plays a big role, and it can have a significant potential, especially when it comes to agriculture and food systems that today, as we are going to see in the next slides, are remaining with a low investment within this sector. However, as you can see from this slide, all countries continue to recognize agri-food systems as climate solutions in terms of priorities, and is within one of the most highly recognized priority sector for mitigation, as you can see from the slide here. When we talk about mechanisms, it's important to understand the supply and demand rules that are in place. They are in some way also interconnected. If we look at the supply side on the left, we have mainly three different types of carbon credit mechanisms. The one that we just mentioned on Article 6, for example, and there you have 6.2, where you have bilateral agreements or ITMOs, international transfer mitigation outcome units. And we have seen some examples, for example, between Switzerland, Japan, and developing countries in Indonesia or other countries also establishing agreements on 6.2 for host country and buyer country corresponding adjustments. And then we have also 6.4, which is the successor of the CDM. The CDM is the UN Registry for Carbon Credits in the voluntary carbon market. And this 6.2 now, 6.4 mechanism called PACM, as you can see in this slide. It will be an high integrity and quality platform for carbon credit, and is still evolving. So there is a supervisory body that is working on the methodologies. And here financial institutions can start to play a role to advocate, for example, on agricultural methodologies and practices that could be addressed within this new registry. Then you also have governmental crediting mechanisms, such as the one present in Thailand or Australia, with specific domestic carbon taxes. And then, very importantly, and it will be a focus point of this webinar, because it's where we can, where also PDBs, private sector can play a role immediately. It's the independent crediting mechanisms. You will get familiar with those standards. We will explain in another webinar the project development elements of building a carbon market project. Then on the right, demand side, also very important, is understanding the dynamics of where demand could come from. And we have both domestic compliance. So the example is EU ETS, the cross-border mechanism in the EU for compliance market, what Elena explained earlier, with the cap and trade system for specific high emission sector, like for example, iron and steel, is one of the biggest ETS emission trading system compliance in the world. Then we have international compliance, for example, CORSIA for the aviation sector, and then also NDC achievement that is very relevant. And the example that I made earlier on the ITMO on Article 6.2 is the example of the demand that can be created from a host and buyer country point of view. And then last but not least, voluntary carbon markets, where we will see now specific focus for this. So voluntary carbon markets has been developed for many years, as you can see from this slide. It has gone through also a lot of criticisms, which have led to this concept of high integrity and quality protocols, and we will see some of them later in the next slides. And this, the value of the VCM, the voluntary carbon market, has gone up to almost $2 billion in 2022, and then going very much down to 535 million because of the critics around integrity on the carbon market. We will see in the next slides how this is being tackled, but it's we want to set the right expectations here. Obviously, there are risks around carbon market. Then we need to also see how PDBs can play a role here in in improving that certainty both on the demand and the supply side. In terms of market scenarios here, you can see that, and also here again, we address quality and integrity. we see that the trend, if a high quality scenario is going to be developed, should go up to about almost a bit more than $1 trillion in the market up to 2050. But important to address the removal scenario and involuntary market scenario if obviously no action is being taken to address integrity elements that are creating this uncertainty in the market. So when it comes to trends and market share by sector in relation to mitigation potential, what we see from an FAO perspective is that agriculture from the graph has a big potential for mitigation, but very, very little investment for project development in carbon markets. And here we are talking about voluntary carbon markets. So this gap can be addressed through different types of project types that we have seen are being developed across the world. Here are some of them in relation to the methodology that have been developed. And the big trend is on the agricultural methodologies that are playing a big role in terms of high integrity and quality, because new methodologies are, given the integrity and quality issues, are being developed with elements that address those issues. So they are much more stringent, much more robust when it comes to MRV, so monitoring, reporting, and verification. And in that in turn, obviously, is having a big role both on the supply and the demand. So what is the rationale for PDB's involvement in carbon finance? So given that there is a huge gap to address, as you can see, to $2 trillion per year, those instruments of carbon markets can be a huge potential to bridge this gap. And how PDBs can play a role within the transition will most likely depend on mobilizing private capital, improving project bankability in relation to integrity and risk management protocols. And we will see now why. So when it comes to integrity and why it's important, we need to address different elements that are applicable to also the project development aspects for carbon credits, for example. One of them, for example, is the element of additionality and MRV, especially when it comes to measuring with robust carbon models the real climate impact. As Elena mentioned, one carbon credit is equivalent to 1 ton of CO2 either removed, reduced, or avoided. And MRV systems, additionality and permanence protocols have to make sure that it's actually that ton that is being removed, reduced, or avoided is effectively being done and also monitored over time to avoid any integrity issues. There, obviously, we have the element of permanence, and that's where risk management protocols and where Agri-PDBs can play a role. Because you have a natural exposure to instruments that can be leveraged and they can be safeguards for both the supply side on the project developer side, but also for private companies on the demand and the buyer side to make sure that they are being safeguarded and protected when it comes to analyzing and identifying risks related to integrity and quality. Obviously, once the knowledge is there, because this is one of the aim of this webinar, is also to address this knowledge gap so that you can make better informed strategic decision also for your clients. I won't go into much detail of the double counting and safeguards for farmers at this stage, because we will have a webinar that will look into specific project cycle example on those elements. But this is just high-level overview to show what could be elements that to consider. So when we talk about integrity and quality, and how this has been addressed in the last 2 years, the Integrity Council of the Voluntary Career Market has been created. It's a scientific committee based on about 50 scientific advisors to create what they call the core carbon principles. And this is to make sure that on the supply side, projects are being developed with integrity at its design principles. And then on the voluntary carbon markets, on the demand side, we have the Carbon Market Integrity Initiative, the BCMI Codes of Practice, which is these are rules and protocols that companies can follow and use as a guide to assess integrity of carbon credit. So this mechanism that has been developed in the past 2 years is allowing the transition towards high integrity and high quality carbon market. Obviously, to address those barriers, especially around access to capital, the financial sector can have a big role. And within this role, and to address and bridge this gap, one of the examples that we have seen is crowding private finance, having the de-risking tools for high integrity projects to enable farmer access to carbon markets. And here we are showing some examples. I will stop here to engage directly with you live on another poll, because we'd like to understand what is the biggest opportunity for PDBs in carbon markets. What do you think they could be? We'd like you just see in a few seconds the poll. So you should be able to see now the question. In your view, what are the biggest opportunities for PDBs in carbon markets? We'd like to hear from you. I'll give you a few seconds to respond. Okay. Just 2 more seconds. Okay, I'll end the poll. Okay, let me share results. And what we see here is that mobilizing finance and de-risking carbon projects is the biggest opportunity for PDBs in carbon markets. So this tells us that on one side, you are aware of what you can be capable of within the carbon market ecosystem. But on the other side, we are also seeing some people have responded supporting countries to meet their climate targets, developing new revenue streams, and also supporting the development of credible and high integrity carbon markets. Obviously, we will address all of them, but then in terms of prioritizing what could be immediate actions, near term, medium term versus long term actions that could be planned, we will be considering what are the building blocks of having strategies that can act as enablers for PDBs within the carbon market ecosystem. I'll stop sharing and continue the presentation. And now we are kind of funneling down more towards, okay, what are PDBs' potential roles in carbon markets? I mean, we could have put here more than one slide, but we summarize some of the points where we are seeing examples being developed and where we think that could be PDBs can position themselves strategically. Some of the points that is also being addressed is strategic guidance, but from different perspectives, both on aligning carbon markets with both national climate and development strategies, and in also facilitating cross-sector coordination, for example. Technical assistance, once you have the expertise and knowledge within the PDB, you can leverage it to have an additional let's call it a service or commercial activity that could be seen by your clients as strategic for their risk management and for their portfolio. So here we mention about market design, addressing what I said before, recognized methodologies, especially for agriculture, agri-food systems, MRV systems, because this is close related to integrity and quality. And of course, having the procurement aspects as well, where you could be positioned as safeguard to understand, okay, what are high integrity carbon credits? How is quality defined? And where should the company invest, for example, to make sure that they don't have big risks related to either project development side or the buyer side of the carbon credit themselves. Then market integrity, of course, how to embed this in the best practices and standards. And we are seeing here the initiative of the core carbon principles, knowing what they are and knowing how they are applied for project development or for buying carbon credits will allow you to protect and de-risk any potential investment portfolio, especially when it comes to the net zero pathways that private sector is focusing on, and in some continents being obliged to follow, especially in markets where they have to pay to reduce emissions, and they have obligations to reduce their emissions, reduce and compensate with carbon credits. Risk management, we said it earlier. I position PDBs as a player or main stakeholder around technical tables for to organize the instruments and the knowledge necessary to understand what can be risky, what can be opportunities for your clients. And then last but not least, knowledge sharing. Once the mechanism of carbon credit are well understood, both from a trading perspective, but also due diligence perspective, and that is where the elements of permanence lay within carbon markets. You will be able to address some of the issues around integrity, so that the conversation has moved towards high integrity carbon credits. When it comes to opportunities, PDBs can become a leader within the stakeholder engagement. First, because of its natural exposure on providing the financial incentives and investments for project development. And on the other side, from a resilience sustainable development point of view, because it's important to know that carbon credits are not just looking at the carbon, CO2 equivalents, but also at the co-benefits. So we're talking about biodiversity, water, we're talking about also well-being, social impact. Obviously, when it comes to farmers that have higher costs within this global supply chain, and also the related risk. And we need to create resilient ecosystems for them, and projects which are related to carbon credits that are being monitored and that are of high quality can provide real benefits both for the environment, for the community, and also to address risks specific to the corporations which are either using the land to produce raw materials for their products, or to even address emissions within their supply chains. So all of the elements of mobilizing private capital in providing guarantees or structured finance, or even unlocking commercial pathways and portfolio diversification, as we were mentioning earlier. These are all elements that can become very important for your customers. Another poll quickly, as we are running out of time, we'll quickly share with you the poll. This is the last poll. Let me launch it for you. So, what are the biggest challenges to PDB's engagement in carbon markets? We'd like to hear from you on this as well. Give you a few seconds. Few seconds more. Okay, I will end the poll now. And share results. So we are seeing that the answers are pretty much spread out. Most people have answered lack of bankable financing structure, even limited technical capacity in carbon markets understanding. And this is what we want to address first, of course, and also is the aim of the webinar series that we are also running through the FAST partnership team. And then we also have regulatory and legal uncertainty, and also some related to project performance and integrity risks, and a few more also related to risks as well, or even volatility of demand and prices. So all very good points that we need to address. I'll stop sharing and continue. So when it comes to risks, and I will not go into the details of this slide, because we've been mentioning about integrity and quality, because at the moment, the major risk as related to uncertainty in the market as also addressed during the live poll. And also this is related, of course, to reputational risk and public scrutiny. And this is where PDBs can play a role to protect and to have the de-risk tools necessary to make sure that the companies or on the supply side project developers develop high integrity carbon credit projects. When it comes to the cost structure of the project development, and we will see this in another webinar when it comes to project development, there are enablers that can obviously remove those barriers. But it's important to understand that project life cycles are, come at different levels of risks depending on location, on type. We will be addressing some of those points in the next webinar. When it comes to bridging FAO and PDBs, so the way we position FAO as a neutral partner with high technical expertise on agri-food systems, we support countries upstream. So we are trying to build readiness on the infrastructure for Article 6 and carbon markets. But where PDBs can play a role is to actually engage downstream to use carbon revenues to enhance that bankability, the blending and scale of agri-food investments, for example. And that collaboration can play a big role overall. When it comes to enabling conditions, recommendations, and key takeaways, what it's important to understand, and we want to also, as a takeaway of this webinar that is obviously very short to address such a very big topic, is that to be able to consider carbon market investments and the tools and instruments that we've been discussing, we need to make sure that the enabling conditions are in place. And that comes to elements of advocacy and policy engagement to reduce that risk, regulatory clarity from a policy for policymakers, of course, on the legal status of carbon credits, and that alignment across the integrity frameworks, which have some gaps and require the necessary capacity building and readiness to be at the level necessary for carbon market development. And then when it comes to recommendations, we like to share that obviously PDBs play a huge role, as you have seen in this short presentation, by providing clear market signals and being an advocate for high quality and high credibility methodology standards, institutional elements that will go down that road, will enable us to endorse the use of those carbon credits and also at the same time reduce the risks which are currently in the carbon market space. So contributing to scaling up this high integrity carbon markets is necessary, and you will play a big role within this landscape. So this is a summary of the key takeaways. And last but not least, we at FAO have produced and published last year a paper on agri-food systems in the voluntary carbon market that we would like to share with you, that we are obviously updating. We'll be updating every year as this voluntary carbon market evolves quite fast, but there are some interesting insights that we might touch also within this report briefly in the next webinar. So sorry for the time. It's 10 to 5 p.m. here in Rome. I'll leave the floor for questions and comments. Thank you.
Thanks a lot, Ivano. And of course, all the materials will be shared after the webinar. Maybe we can start with the first question from Alioune Sedi from La Banque Agricole in Senegal. Alioune, do you want to take the microphone, or should I read it? I don't know if Alioune is still online. Yes, you are. So the question was, would it be possible to have examples of credit carbon in the agricultural sector, particularly in Africa? I guess that will be also more developed in the second webinar, but quickly, Ivano?
Yeah, absolutely. So it will be developed in the next webinar. There are many projects in the voluntary carbon markets in Africa, and we can also have specific chapter there to explain what is happening on carbon markets in the African continent. But yeah, indeed, there will be a specific point in the next webinar. But if you have any questions or any comments, feel free to reach out to us, and we will be happy to answer you.
Yeah, exactly. Don't hesitate to raise your question also after the webinar, and we will do a follow-up. A question from Juan Pablo Espinosa from Finagro, Colombia. Juan Pablo, do you want to take the floor?
Sure, thank you. And thank you very much for the presentation. Are you hearing me okay?
Yes. Thank you.
Wonderful. I just want to know how does this works for those projects that have like a long-term scope and that will start doing the capture of carbon in the future? For instance, when you want to do like a transition in a livestock agricultural project, can you do the sale of those carbon credits today, even though the benefits will be clear in the future, or how would it works?
Oh, great question. Thank you. So what we are seeing, and I'm answering also from an FAO perspective here, because as we said, we are supporting project development from a technical point of view, but obviously with no interest or bias or positioning on the sale of carbon credits. But of course, we know how project development cycles are developed. So to answer your questions, that depends on the contractual module, contractual agreements that can be in place within the stakeholder, the public and public partnership for the project development, for example. What we are seeing is that there are examples of offtake agreements, pre-purchase agreements with specific conditions, specific terms and conditions on both providing high integrity carbon quality credits and especially on carbon removal. because this is what is being pushed on by the Integrity Council of the Voluntary Carbon Markets, and by the initiatives also, but also from the IPCC. Because, and we will see it in the next webinar, we will define what is quality and integrity. How is that defined, and how that affects the price and the value of a carbon credit. Because that has to be discussed from also benefit sharing mechanisms. Who is going to get the margin of the credit, and to which percentage? And that is where we need to make sure safeguards and mechanisms are in place to make sure that in the case of agriculture, for example, farmers, local communities, indigenous peoples, depending obviously on the type, are getting the biggest benefits out of this mechanism. So any agreement, even related to land tenure and carbon rights, and the effects on the long term, both when it comes to viability, will usually is addressed from a feasibility study perspective. And there are pilot projects being done before any project is being scaled. So those elements of uncertainty can be removed at this stage, let's say. I don't know if I answer your question, but it can be multiple answers depending on the type of agreement that can be made on the carbon market, because there is a flexibility there on the agreements, and this is where PDBs can also play a role, because once you have the knowledge on what is high integrity and quality, how MRV works, how quality and integrity is defined, then you can protect and de-risk projects, and also on the other side, protect on the client or the buyer side of the carbon credits to make sure that they are buying high quality and high integrity. I hope I answered your question, but feel free to also send a comment or send further questions if you need more clarification. Thank you.
So we have a question also from Boaz Korir. Nice to see you again, Boaz. Boaz is from Agri-Finance in Kenya. For an intermediary PDB, where should they start in adopting and implementing carbon markets? So that's a very large question.
Yeah, so thank you for the question. It's that again, it depends. For an intermediary, usually there is an assessment of. So we are talking about Kenya here, and what we normally do. It depends if we're talking about Article 6 and country ITMOs, or 6.4 carbon credits, or where we are talking voluntary carbon markets. Because if we're talking about voluntary carbon market, we have already a lot of players which have developed projects, for example, in Kenya, and PDBs can already act or be part of the stakeholder group to develop new projects, to be there to safeguard either on the project developer side, so for example with buffers, insurance, guarantees in case of, obviously, there is already a mechanism in place for buffers for carbon credit, but there is no real instrument. We are seeing insurance companies that are being specialized there, for example, but PDBs, I think, can play a strategic role within the stakeholder engagement and act as an intermediary already from the start in the origination and the design of the project. But of course, depending on who is going to develop the project, whether at governmental level or private level, that engagement can vary in terms of what, when, and how. But if you want, we can even deep dive or discuss further.
Thank you. We have also a question from Karen Udaida from Banco de Desarrollo Productivo de Bolivia. Karen, do you want to take the floor?
Thank you, Terry. Thank you, Vano. Yes, thank you for the complete presentation. just I want to ask, beyond the safeguards requirements, how are the carbon mechanisms designed to reduce financial, social, and implementation risk? And this is particularly in relationship with indigenous people, and how are the benefit sharing and distribution mechanisms secure, ensure transparency, equity, and long-term for sustainability, please?
Yeah, great question. Thank you for asking this question because it's something that we are also developing internally here at FAO. Obviously, in FAO, we have protocols for benefit sharing mechanisms to safeguards on equity, inclusion, women and youth, and obviously indigenous peoples. But then when it comes to carbon markets, the uncertainty and the permanence or reversibility risk and the impacts that we have seen in the past on specific countries and projects have to be addressed with protocols and have to be monitored. So what we are seeing, and we aim also to share those examples in the next webinar, is that new methodologies like Verra, BCS, they have established new protocols. I will also share together with this presentation what they are because they are very recent, to establish the benefit sharing mechanisms that will allow the project proponent, but also obviously all of the DVBs, so the verifiers, validators for the project, to make sure that those stakeholders in the project are being safeguarded and are being protected, and that the benefit arrives to the right people in the right amount. Here in FAO, we're also organizing a number of events to address those specific, I would also call them issues, and also opportunities within carbon markets, because this is where also FAO can play a role, to make sure that there is clarity on what the issues are, that we are transparent as to what are the problems that are being communicated and shared by those stakeholders, which are being affected today in a negative way, and what solutions are currently out there, because it's a very delicate and tricky, obviously, topic. And that needs to be addressed with not the right knowledge, the right expertise, and the right tools. So I don't have the specific answer, because if we would like to explore further the next webinar with this specific example that I was mentioned to you earlier. But I will make sure to send you, and I will put it in the slide, the link to this new protocol that is being established to address those topics, for example, within the BCS. So thank you for the question. It's very important.
It's been more than 1 hour. We still have many questions. I will give the floor to Abdouaziz Diedou from La Banque Agricole. Thank you for nice to see you again also here.
Thank you.
Yes, you hear me?
Yeah.
Yes.
Thank you very much, Jerry. Nice to hear you too. This webinar is very suitable for us, and we thank you a lot by giving those information which allow us to more understand about carbon market. So my question is, as you know, private sector company that invest on carbon market project to benefit to the add value of the carbon, how to say, profit. So has a commercial bank working on project, working on financing green project, if we want to accompany private sector company on financing those projects on carbon, what can be for us the add value lays to carbon processing or carbon marketing, something like this? I want to understand, because here at the bank we are discussing with many companies. What we want is to have some specific credit line dedicated only to finance those carbon projects. So how we can deal I don't know. I don't know if you understand really my idea, because what I want is
Yeah, yeah.
to secure some credit line or funds or flow funds dedicated only
Mhm.
to this kind of project. Yeah.
Yeah, no, great question. I understand, and we would like to also provide what are current examples of banks or financial institutions and what role are they playing within the carbon market, either project development side on the buffers, guarantees, and for the supply of carbon credits, and also on the demand side for private sector companies that either want to reduce their emissions within their agri-food system supply chains, and bearing in mind that over 90% of the emissions are within scope 3 of a private sector company in the food sector, for example. And so the engagement with farmers, with agricultural companies, it's crucial, but it's very hard to engage with because it's within the indirect control, so indirect emissions. And there are some developments there also where banking, financial institutions can play a role. But when it comes to your question on, well, okay, well, how can we justify having a credit line for such projects to enable financing of carbon credits for the private sector? What we are seeing is that there are examples of banks, financial institutions that are pushing for this green loans or investments to prove that by financing the company, they are automatically making the company and obviously establishing a low carbon emission activity within the project, within the land. And it's like a triple win solution because not only the company is more resilient, and we are seeing it with ESG scores, so rating agency, financial institution putting a positive rating on companies which are making their supply chains more resilient. We are seeing on different studies on having a resilient company that is investing in carbon credits, especially within their supply chain, has obviously less chances of going bankrupt and being more resilient to both environmental catastrophes or obviously climate change. So this already by itself is reducing risk for the bank that is investing in the company and also in having the returns in the long term. Obviously, this can make logical financial sense. But there are also cases where, and we will look at this into the webinar in the next series as specific examples, where green bonds are being used also to help companies buying machineries that are necessary to apply the regenerative agriculture practice that is allowed under the methodology to generate the carbon credit. For example, large machineries that enable them to can be or the use of organic compost, or it can be any practice accepted by the methodology to generate the carbon credit in exchange of margins, fees, or quotas of the carbon credit. And that also allows the banking institution to reduce the risk on the investment that is being made already. These are companies that financial institutions that are already providing investments and loans. But in this case, it has obviously a de-risk instrument perspective because it's helping the company becoming more resilient and so reducing risk and having this triple win, let me call it this way, perspective. But we can discuss this further. Sorry for the long answer. I hope I answered partly your question, but it's very broad. So
I guess we cannot answer to every question, but thank you for your active participation in the chat. Some of the question I see, for example, the question of Alina Tsiapane or Laura De Luca are very accurate, and we will try to build on this question also for the organization of the next webinar. Same for the question from Ramdam Landaba, how to structure a carbon market in Morocco, and we can give also examples in the next webinar, and we will keep all your questions. Maybe I'll give the floor to Federico Sancho Guevara, who raised an early question. Federico, if you want to intervene before we close the webinar.
Sure, Terry. Thank you very much. Greetings from AICA here in Costa Rica. This is the meat on the bone question. In this credit chain, everybody takes a bite. If we look at the economic gains and the market, how much do you expect or believe it's the current percentage? If we already have experiences on either PDBs, intermediaries, ranchers or farmers, what's the percentage breakdown down of the profit? Do we have experiences on that? It would be great to hear in the near future experiences where farmers really are showcasing that they are making money out of this business. Thank you very much.
Yeah, no, a great question. I mean, I don't have the specific data to share at this stage, especially considering that we are not positioning FAO as a transactional buyer, but we do obviously analyze this data. We do analyze projects. What we would like to provide is, okay, we know where those projects are not working, and that's why we are addressing integrity and quality both with governments and also local stakeholders. But we also know which projects have worked and are providing the real benefits, not just from an economic perspective, but also from a mitigation and adaptation point of view. So in the next webinar, and I'd really love for all of you to join, if you can, we will be sharing a specific example in agri-food sector. If we can, we will try to do in different continents to address relevance, geographic relevance. To show you, okay, what they are, and now, for example, even FAO has played a role there. So I don't have the specific data for you now, but we can share more data, absolutely more data, and please have a look at the VCM report in agri-food system that I shared earlier with the QR code, because we have put some examples there that are concrete and that can maybe give you more information as to the bankability, but also to the benefit sharing of some of the projects or even methodologies which are more successful than others when it comes to integrity and quality. So yeah, I hope I answered your question for now.
Thanks a lot. Thank you everybody for your participation. And we had a large participation from and PDBs from Niger, Mexico, Sudan, Côte d'Ivoire, Mali, Uganda, South Africa, Botswana, many participants from Brazil also, Colombia, of course, Kenya, Bolivia, who else? Ghana, Salvador, Morocco, Senegal, from Benin also. So thanks a lot for this very diverse participation. We will keep all your questions. One of the lessons learned also for the next webinar is that we might try to have a longer discussion at the end of the webinar, because you have many questions, and this webinar also the opportunity to discuss and to exchange. To wrap up, today's session was deliberately focused on building a shared understanding of carbon market in agriculture and the strategic role of public development banks. The aim was not to provide all the answers, but also to help us to build the next webinar and to better understand carbon market. On my side, I would be very happy to better understand also the debate on integrity. What does it imply to have a monitoring, reporting, and verification system? All the debate also of permanence in agriculture and risk management, and what could be the role of a public development bank. But thanks to all your questions, also we will try to structure the coming webinar. So the next session should be in April, and it should be more operational. We will share more examples also. And we'll focus on concrete examples from PDBs, and we'll try to have some PDBs as speakers. If some of you would volunteer to be a speaker also in the coming webinar, don't hesitate to contact us. Ivano, Elena, Julia, do you want to conclude here?
Well, from my side, thank you very much for everybody for participating. Thank you, Thierry, for moderating and coordinating this webinar. It's been useful and a pleasure. And we very much look forward to the next webinar to also answer as many questions as possible. So thank you once again. I don't know if you, Elena, you wanted to.
Thank you all for participating. And thank you, Thierry, for giving us this opportunity, and looking forward to the next session, next webinar.
Thanks a lot. So everything will be recorded, and thank you also for the list of documentation that we will share also to every participant.
Absolutely. Thank you so much.
See you very soon. À bientôt. Goodbye.
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 Muchas gracias.
Merci beaucoup.
Goodbye.